Well, yeah, I do agree with you in terms of, people are obviously kind of responsible for their own, financial well-being and really should be able to trade what they want. I think probably, as you say there are some concerning signs that, basically a generation of investors here have leapfrogged, traditional savings products and are trading Bitcoin. They're diving right in at the very deep end of speculative investments. And certainly, here in the UK, we have had some measures we've been imposed by the financial regulator in order to limit some of the exposure that individual investors can get to Bitcoin. But they still can buy it on exchanges. And I think some of them are doing it with a fairly small amount of money. It's a little bit of a flutter. But equally, there are signs that some people are perhaps playing with too much of their money in Bitcoin, and also aren't really fully cognizant of the risks, because if you've been looking at the Bitcoin price for the last 2 months or so, all you've probably been seeing is a rising graph. But you don't have to look back too far, and it's kind of back end of 2017, 2018 to see that big lift off that we got back then, and then a big fallback as well.
I think you've alluded to where I'm going next in your first answer, though. But you also said the word investors. Do we have to stop giving them the term investors? These are just, look, there's Bet365 out there, William Hill, Betway, Betfair, you name it. This is just gambling, pure and simple. This is nothing to do with investment, is it?
I think that's a really good point, actually, because we have seen that kind of element creep into it. We've seen this kind of idea of gamification of investing, and I think there is perhaps that kind of ideal of get rich quick. Do you know what I mean? That's really kind of what people are looking to Bitcoin for, whereas traditional assets are more about getting rich slow, which is a lot more boring and takes a long time. But on the other hand, I would say that we have got some, more traditional investors, institutional investors who are looking at Bitcoin as well. I think the difference is that those investors are looking at Bitcoin as part of a much more diversified portfolio, and they're also obviously professional managers who can kind of switch in and out of the currency as and when they want. So all investment has an element of speculation to it. But, this Bitcoin is really at the very speculative end of investment, if you want to class it as that.
Let me push back and be the counterweight here on the set. The ESA savings account, I can get roughly 0.05% at worst to 0.2 at best. Is it investing if you're barely getting any return back on your money? So if you've got a high risk profile and you're a young investor, say you've got many years ahead of you, is it a bad bet to put a little bit away in Bitcoin? Not a huge amount, but a little bit to reflect risk.
Well, I think saving rates are a very, very interesting point, and you're absolutely right to point out that you're getting a below inflation return on savings accounts at the moment. Now, that's because of the low interest rate environment. We can talk about how central banks have really been manipulating money in their own way. But the important thing about a savings account is while you're not getting a return on it, you're not actually in any risk. There's no real risk to your capital. So, the $10,000 that you have in there at the moment, it's not going to grow particularly fast, but, in a month's time, it's going to be $10,000. Now, as we've been discussing this morning, the price of Bitcoin has fallen, $10,000 in kind of a matter of a day. So, there is that question of the kind of risk profile of Bitcoin. And, I think absolutely it's fine for people to have a very small amount of their money invested with, the cognizance that, it may continue to do very well, but at the same time, the cognizance of those risks that it may actually fall significantly. And again, I'll come back to the financial regulator over here in the UK who said basically that anyone who's putting money into cryptocurrency should be willing to lose it all. And I think that's probably a very kind of extreme case, obviously, but it underlines that there is huge amounts of price risk in the asset. And I always come back to the same question, which is would anybody like to be paid in Bitcoin? And the reality is you'd have some really great years, but equally you'd have some very fallow years as well. And there's kind of a question there about how something so volatile can actually then become a medium of exchange in the real economy. And there are big question marks about that, which ultimately affect its functionality and its price.